Hi everyone, I haven't released an options trading video in a while. I've been focusing mainly on dividend stocks and taxes, and I might have a little stock or a company interview coming up soon. But now with everything going down, I just want to let you know when VIX is going up, the volatility, when everything's kind of going down, it is the best time to be selling options, not buying, selling. Let me just go into some Reddit posts about people freaking out about their portfolio. How am I affected? How affected am I to the recent crash? When everything's going up, everyone's kind of fine and no one questions when something's doubling in a year, which doesn't make sense. How are you calibrating your investments? I know it's a long game, but it's pretty depressing. Yeah, when things double, you don't question it. You think everything is fine, and it's not normal. So the higher we go, the more we're going to crash or fall. So I kind of like these small decreases. We're all talking about staying the course, and everyone's kind of not selling, and everyone's questioning their strategy now. Is this time different? It's so funny. What I want you to do, if you're new to options trading or you have been options trading, go to optionstrat.com and you can play around with options. So if we just, right when you don't need to log in or create anything, go into build, and what you want to do, I guess if you want to do a short put, you can play around with what you want to input in here. You can put NVIDIA if you want. You can put Tesla. I would recommend playing around with the dates. If you want the tasty trade way, you get the expiration around 45 days. Selling a put, it tells you how much money you'll make, your break even. So let's move our target price. Let's say we want to sell at 180. I just want you to see how much money you could potentially be making. So right now Tesla is 240. And if we sell 25% below the current price for 40 days, we could be making, I think, around 5%. So if I bring this over, so right now, if we make $790 with $18,000 max loss, like how much we're risking, we could be making 4.3% for 40 days. And that is 25% lower than what it is now. So if we kind of go into Tesla stock, so it's already down 36% year to date. So you're not selling options at puts at the peak and then it'll never come back. You'd be waiting $140. It might never come back, to be honest, because that was all-time high. But it's already gone down 36%, and then you're selling an option another 25% below this. So if you look at the 5-year chart, it has hit this multiple times around like the 180. So even back to 2021, it could be that price. You could do this with the S&P 500 as well. What I want you to do, if you're using like Questrade, even if you want to sell on the S&P 500, if we look at the VIX, you notice how everything is going down. This is not the end of the world. This is good for options traders. VIX right now is 45. We haven't seen this in years. Just take a look at a few weeks ago when it was at 21. I do think 21 is a good time to be selling. You could make money. But even before that, it was in like the 12s or like 17, 15. You're not, when VIX is low, you have to sell closer to the money to be making any decent premium. Like you want to be making at least 1% a month, but when the volatility is this high is when you could be making the most. So I would take advantage of this. Even though the market is going down, let's look at SPY stock. So down 13% year to date. If you don't think it'll ever come back, you shouldn't be trading options, but now is a good time to get a decent discount. You see this massive drop. I do think it'll come back. If you just look at the long term, every now and then we hit these like dips. They do come back. I do recommend you sell options on it. Now, you don't have to be selling at the current price. You can sell further away from the money. You can sell at 460 or 450 and you can still be making decent premium. I aim at least 1%, 1.5% per month. You could be making a lot of money on it. Let's just look at some examples. If you want, you could be selling credit spreads or even strangles if you want. I wouldn't sell naked calls. I'd sell call credit spreads, but the bounce back could be higher, and obviously we don't really know, or we can't really predict it pretty well. But if you want, let's just go 30 strikes. If you sell something, let's say in the 490s for 40 days away, you're still making a decent amount. Implied volatility. We haven't seen this high volatility in the S&P 500 in a while. So if we want, let's just, an example. So this is Tesla. Let's say Tesla is too risky if you want NVIDIA. So let's say the same expiration, if you would you do 75 days? I don't know if I'd go this far out. You probably won't be making enough. Play around with the option strat. I do like the idea of selling cash secured puts on something you can afford and something you want to hold. And I would turn around and sell covered calls and run the wheel if it ends up going down. That's what I'm doing in my Interactive Brokers, my paper trading account. So right now it's at 95. If you want to sell something 75, so what is 75 divided by 95? So is that a 22% discount? Is that enough? How do we play around with this? Okay. Our break even would be 71. We're making $322 for 7,500 in risk. So what is that return? 322 divided by 7,500. So we're selling 22% away from the money, out of the money, like a decrease, and getting 4%, which is not too bad because it's 2 months. So you're getting 2% per month, 2.2%, which is above my minimum requirement. If you want, you could even be selling spreads. So you can buy like a 65 if you want, and you could do any of these if you want. I do like selling naked options or like cash secured puts, I guess, because I like the premium. When it comes to the call side, I sell call credit spreads just because I don't want it to increase to the end of the world and then me make max loss, and then get hit with max loss. I don't know why I forgot my English there. If you're on Questrade and you want to do, I think, cash secured puts are level 4, so that's like naked trading. You do need at least $25,000 in there, and you have to have level 4 options trading in there. So if you're creating a new account, if you only have $5,000, you can only do level 3, which is credit spreads, but you have to also like sign a waiver that you understand and you know the consequences of you getting into it. And you can also, if we look at the stock SPY, you can also see the margin requirements as well. So lower margin requirements on something less risky like SPY. If we look at Tesla, I think it would be 30% or slightly higher. Tesla, so yeah, margin requirement a little higher. But I do recommend now probably the best time for you to be selling options when the volatility is this high. You're making more for roughly the same amount of risk, maybe even more risk. I do think now is a good time to be, let's say, sell something where you get assigned on and then own the shares for it to come back. Just like this. 5 years ago, if let's say you saw it going down at 420, you sold a cash secured put at 390, you got assigned at 390, and then you held it back up to, even now, you're up 30%, or even at the peak, you'd be up 55. Try to get assigned on index funds. I wouldn't risk something as volatile as Tesla or Nvidia for beginners. I do it because I like the risk, and I've had Tesla for a few years. But yeah, just my 2 cents. I thought I'd jump in and just let everyone know now is probably the best time for you to be selling options, even credit spreads if you want defined risk. Because of the volatility, you can make the most. This won't last forever. So if we go back to the VIX, if we see the long term, we get spikes. So even if the stock moves against you, because you sold it, when the volatility goes down, you make money regardless. I hope that makes sense. Now is the worst time to be buying options because it'll be more expensive. It could go in the right direction. You could, let's say you buy SPY, you think it'll go up. It doesn't go up enough because you paid too much for it. When was the last time this happened? This was the Volmageddon when it hit this high. Yeah, I guess in September, but it always reverts back. I do think selling options now would be the best. Thanks for watching. Let me know if you have any questions, and tune into the next one.